Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys.
All right, good morning, guys. Welcome back to another live stream. Bear with me. I'm just typing something to the devs. Every once in a while, I spot something that needs to get fixed on the Edge Finder while I'm streaming. And if I don't write it down, I forget it, and then I might not get to it later. Okay. Hope everybody's doing well. Some interesting stuff in the last 12 hours. Feels like there's just kind of a perpetual news cycle. I've been talking about that on my videos and streams here recently. Market up big on a couple things. Tesla earnings were bad, but also good. We'll talk about that in a second. And then if we take a look at, of course, some of the other big headline stuff, which was basically Trump responding to the whole uncertainty around Powell and actually saying that he has no intention to fire him. And the market loved that. Obviously, that was a big concern the last few days. Is there going to be kind of infighting, if you will, between the U.S. government, Powell, and the Trump and team? Are they going to get rid of Powell and all that? That really had the market uncertain for a couple days. And then all of a sudden, again, yesterday we get the announcement, Trump saying, I have no plans on firing him. And so the market loves that. So NASDAQ's up 3%, just another day in this crazy market, man. That's all it takes right now. One good, sliver of good news, and this market is up 3%. Pretty crazy stuff. This is why I find it really hard to try and short an environment like this. You have, again, at any moment that things get ugly, Trump has the power and knows he has the power to reverse that fear factor very quickly with a single, mention to a reporter or to Bloomberg or CNBC or whatever. If he makes one single comment, those networks kind of broadcast out what he has said and can very quickly move markets. It can go both ways. So we're living in this environment where, you have tweets and comments to reporters dominating market moves. How do you trade in an environment like that? I'll tell you, it's not easy. It's not an easy environment. And if you have been around trading for a while, then you may remember that this was how it was in, Trump's previous administration, 2019 into 2020. A lot of focus goes on Trump, as opposed to, Biden, who there was still headline movement, but Trump is just way more hard to predict, it seems. And I'm not saying whether you like him or not. Like, you might like what he's doing, you might dislike what he's doing. The point is, he's very off the cuff, and from a trading perspective, that makes things pretty interesting because, of course, one single, quick comment can cause the market to rip or the market to dip. So really interesting stuff. Anyways, I hope everybody's doing well. If you are enjoying, the streams recently, we've been trying to cover all this stuff as best as possible. If you could just hit the thumbs up button on the stream, does help just to support what we're doing here on YouTube. And let's talk some charts. Let's talk some trading setups. Big thing here. We've got what looks to be an attempt to break out of this downward structure on the NASDAQ. Is this a higher low? You could wishful thinking would say, yes, that's a higher low. But for me, I like to, when it comes to market structure, I like to wait for an obvious higher high in order to confirm a higher low has been put in. Because to be fair to the bears here, you may just be in a range and we could ultimately see something like this. So I've been saying it for a minute here. 19,200 on the NASDAQ is what I'm watching. And that has significance, especially not just because it's a key level of obvious resistance on this chart, but also because that was the 90-day pause day high, right? So the high of the day, which ultimately acted as resistance from there, right? You saw selling ensue from there. We're now seeing the confirmation from Trump. Hey, I'm not looking to fire Powell. Market loves that. Market bounces. We've got two considerable levels of resistance to consider. This downward trend line, right? Most technical analysts that you're going to watch on socials and whatnot, they're going to have this trend line in place. So we've got to break above that trend line. That is a good, solid technical price action start to a possible reversal in this downward trend. We have a possible higher low. And why am I saying possible? Well, because again, I think a lot of people get really overly excited when they see something like this and they say, oh, this market's going to rip. Maybe it does, but also we've been seeing a pattern here where the market has been faking out everybody. You know who's making the most money right now? Options sellers. Options sellers in the last week have probably done incredible because volatility has been really high. Everybody's like, oh, it's going up, it's going up. And then it's, oh, it's going to crash, it's going to crash. Oh, it's going up, it's going, right? So these fake moves or these back and forth moves are faking people out terribly. That's the type of environment that a news focused market like and what I'm not talking about economic news. I'm talking about headline news. People who are chasing headlines right now are going to be throwing their head against the wall over and over because it's up one morning, it's down the next, it's up, it's down, it's up. It's very hard to get a read on this market. The thing that I want to point out here that would give me some more technical analysis clarity on the NASDAQ is if we get this kind of breakaway move. Again, the announcement that Trump is not looking to fire Powell is a relief. You guys might have heard me in my video yesterday. I adamantly said I think that would be a mistake. And clearly, Trump must be listening to my videos because he then said that. I'm just kidding. Obviously, he's not watching my videos. I don't know. Maybe he is. No, he's not. But my point is, I think probably a lot of people in his own camp were like, hey, we don't need to like start an internal war. We got enough things we're fighting. So the response, right, from the market to hearing, hey, we're not looking to fire Powell is a good one. But again, you're getting this mixed reports every single day. You're getting one thing that's good, one thing that's bad. Trump and China are going to make negotiations one morning. And then the next it's, China's making a big mistake. We're not going to, and then it's back and forth. So how do you trade in that environment? Well, the answer is, again, in my view, two things. Price action, keep it simple, look for clear price action breakouts, and fundamentals, right? Watch the hard data, not the news headlines. The news headlines are going to be really deceiving in the next year. That's the thing about, Trump 1.0 that a lot of people had to learn the hard way is if you're chasing what Trump is saying, it's going to drive you insane because it is just hot, cold, right? Again, and I'm not saying if you like him or if you dislike him, the man is content. He is just a content dude. Like if you like him or you dislike him, CNN loves him in a weird way because they make a lot of money covering him, right? Because he's constantly making big statements. Even though they might not like him, they love his, entertainment value, I suppose. But I don't know. Point is, regardless of whether you like him or not, leave that at the door when it comes to your trading. You have to kind of just filter the noise. And the way I'm doing that, the way I'll get through this time, as I did in the last Trump era, was focus on the data, economic reports, technical reads, and sentiment data. That's all I need, right? Don't worry about if you like or dislike Trump. If that's dominating your thoughts, it's not going to help you. That's going to hurt you in life. Stick to the data, right? If you want to trade the markets, and we know that the news cycle is going to move markets. That's fine, but don't let it completely hinder your bias, right? If you're like, no, this market can't go up because Trump's going to wreck everything. Oh boy, you're gonna regret thinking that way. If you're thinking this market has to crash because Trump's in office, or you're thinking, you know, Trump's going to save the day and the market's just only going to go up, you're just as blind, right? So don't let that political bias that we all have to some extent or another. Some people are obsessive about this stuff. Some people don't really care, but they still have some bias, right? Just leave that out of it. This is the beauty of having a system like the Edge Finder, which gives me scores, right? The scores don't care what the headlines are saying. The scores don't care if they like Trump or not. Technicals and the Edge Finder, the beauty of it is they don't care. They don't care what Trump just said. They don't care if Trump said that in a really mean way or whatever. Like, the systems that we're using here are systems. They're not people, right? That's the beauty of having a system or a robotic way of looking at the market to some extent. I would encourage everybody in this chat, find some checks and balances way to look at the markets objectively, that you've back tested, that you've studied, and you will thank yourself immensely later. Because if you just trade based on your politics, oh my gosh, there's so many people doing that. There's so many people making that mistake. My comment section for the last few months, and it's outrageous on both sides. Like, this is not a, if you hate Trump, you're an idiot, or if you love Trump, you're an idiot. There are people on both sides of this who, and I think most of us are like, yeah, no, that's silly. But there's a lot of people who are doing it. A lot of people are making the mistake of saying, this current political regime I love or I hate, and the market's going to do this because this. And that is a silly, silly mistake that newbies make that over and over. That is newbie mistake 101, is to let your politics infiltrate the way you trade the markets. Stay systematic. That's the key theme of this year. I've been saying that over and over and over this year, and I'm hoping that somebody is getting that. If you're on the same wavelength right there, can you just do me a favor? Let me know I'm not crazy. If you're like, Nick, you're loud and clear on this, can you just do me a favor and type yes or put a 1 in the chat really quick? I just need to know there's some rational people who are like, I don't really care all that much about, being absolutely dead set on politics all the time. But I'm telling you, if you're like me and you're like seeing all that stuff and you're like, this is insanity. There are people who are trading the markets like they truly think the market's going to crash because Trump's in office, or that the market is going to go to the heavens because Trump is. I'm like, what are we doing? That's not a trading strategy. That's just straight up being so politically charged that you truly can't look at the market objectively. Let's not make that mistake. Okay, thank you all for the yeses. Okay, good. I'm glad I'm not. I'm definitely not the only one. It seems like a lot of you guys are on the same page. Cool. So, yes. So let's stay systematic with it, right? Edgefinder just gave me a NASDAQ bullish reading for the first time in some time. We were here a couple weeks ago, okay? And I didn't take a trade. So let me break this down, because NASDAQ is something you guys know I watch. Let me just make sure really quick. Do we have any news? PMIs today? US PMIs 945. Don't let me miss that. Real quick recap on European numbers. How did the euro do this morning? I'm going to come back to NAS because it's top of mind right now for me. Okay, a little bit of a mixed response on euro dollar. Let's just take a look at the UK pound here. A little bit mixed there as well. How's dollar index doing today? Why is that not my dollar index? Let's go here. Go daily. Okay, so dollar index, a little bit pushed lower here this morning. So UK PMIs, manufacturing services. Manufacturing hit expectations. Services PMIs were a miss. Pretty substantial miss, actually. So UK PMIs coming in a bit soft. You got US PMIs coming out in 15 minutes. That could move markets. Then you have French came in line with expectations on manufacturing, slightly soft, and then slightly soft on services. German was strong on manufacturing, and then a little soft on services. So kind of mixed overall. We'll come back to that for US PMIs here. Let me get back to this this NAS thought for just a second. So I mentioned a couple weeks back, right? We got a bullish reading on the NASDAQ when or not a couple weeks, week and a half, 2 weeks, when we had this big up day. NASDAQ was bullish on the Edge Finder. So you might be saying, well, obviously that was a bad idea, right? But the Edge Finder is not a timing tool. We say this often. People somehow never listen to us when we talk about this. Like, you go to our website, people still make this mistake. They think the Edge Finder is some sort of like buy now, sell now tool. It's not that. The Edge Finder is a scanning software. It looks at a lot of data and it gives a bias. It doesn't tell you buy here with a stop loss here or take profit here. It doesn't do that, right? The Edge Finder is a screener. And the reason we don't do that is because we know that there are many traders who trade different time frames. There's people who trade the 1 hour, the 4 hour, the daily, the 15-minute, whatever. The Edge Finder is not a timing tool. It is a directional bias tool based on a list of important economic data, technical data, and sentiment data. So the way we read this, right? NASDAQ is getting a very bullish reading. That doesn't mean that NASDAQ has to be up, 6% in the next 2 days. It just means that the NASDAQ is pointing bullish in terms of a direction right now. And that's not just a technical read. That's an Edge Finder kind of synopsis overall when looking at technical, fundamental, right? And sentiment. So sentiment is pretty easy. This market is scared, right? Sentiment contrarian wise, you are getting a scared market. Take a look at the put to call ratio, which has been elevated for the last few months. People are terrified of this market. Again, who can really blame them? Even if there's just so much change, so much uncertainty with this market. That uncertainty, it doesn't even necessarily make that everybody who is buying puts right now is not necessarily thinking the market's going to crash. But there's so much uncertainty that a lot of people are just like, I just need to hedge my portfolio. So there's a mix. There's people who are straight up bearish, and there's people who are like, I want to hedge my portfolio by buying puts. So we're seeing bearish sentiment in this market like crazy. Also, we get tonight we get the latest investor sentiment survey. Dude, this thing is so bearish. People are so scared right now. That just makes me want to keep buying stocks. And I've been doing that, and I'm going to keep buying them. If they go down again, I'm going to keep buying more stocks for the long term. But everybody is so scared of this market. That creates a really good risk reward. That's why you get one headline like we did yesterday. Powell and Trump, or Trump says he's not looking to fire Powell. Market just shoots up 4 or 5% in like a 24-hour period. Crazy, right? That's this market that we're living in. Everybody is scared and selling and bearish and cautious. Doesn't mean the market has to go up just because that is the case. But what it tells you is that one piece of good news in this market just erupts higher. So I like the risk to reward to the upside. I think from a technical basis, though, that I need to do what I did over here. When we saw this big up day, right? The big up day came into resistance and said, nope. And sellers were able to hold it there. So as a technician and a fundamentalist, I do both, right? I look at technicals and I look at fundamentals. I'm saying, okay, we may actually have the recipe here for a good old-fashioned short squeeze and rip higher on any sort of good news, right? Give me President Xi and Donald Trump have a phone call, one phone call. We don't hear anything about what happens. Just knowing that those two are on a phone together would make this market rip 5+% easily. That's my prediction on that. You get news that Trump and Xi have a designated phone call, and this market rips. That's how sensitive this market is to any bullish stuff that comes out, because everybody is so scared. So Sorry, guys. You guys are saying, I hope Nick reads something in the chat. I'm not gonna stop. I gotta stay with my train of thought, otherwise I'll lose it. So let me finish what I was thinking. So NASDAQ gets a bullish reading on the edge finder, right? Okay. Got a little bit of good news. Powell not going to get fired by Trump. Put that to the side. Thank God, right? Like, let's not go down that path. We got enough fights going on. Let's not fight internally. Anyways, let's see if we can get the breakout. That's really what I'm looking for. We're back to where we were over here. Over here, I said, if we can break and close and pull back, I'm long. Didn't get it. Never took a trade. We're back. We're back to this point. Okay. I'm not convinced until we get this move. Right? So if I'm going to go long the NASDAQ, just because the edge finder has a bullish reading does not mean, like I said, doesn't mean I go and just whip out my wallet and buy the NASDAQ. Again, that actually drives me crazy when I hear people like using the edge finder like that. I'm like, you're misusing. I don't use it that way, right? Nobody should use the edge finder that way. So what I'm doing is I'm looking for this trend line to break. Like if we can close decisively, that's step one. Step two, can we get this break, this move higher? Then we're looking good. Okay. We are running out of time. I'm not going to do questions today because I just have too many charts to get through, and I've been stuck on the NASDAQ here because it's a top setup for me. I'm very interested in the NAS. Euro is also interesting for me if we can get a bigger pullback. So I am watching NASDAQ. So like I said, overall idea, give me this move. Edge finder confirmation has to still be bullish, and then I'm probably long. So I'm interested, but I'm not contrarian for the sake of being contrarian. Just because people are scared does not mean I go long, right? I still need technicals to show me that we're rounding out, that we're putting in higher lows, higher highs, that sort of thing, from a trading perspective. Okay, let's take a look at gold. I'm probably going to get trailed out officially on this gold trade if we break support. We're not quite there. 4-hour chart, we'll see, right? We are at the lower end of this support level. If we take these out, we're done, right? Trade is over, and that will have officially been my best trade of the year. Unfortunately, won't be my best trade ever because we've given back some profits here. But if we put in any sort of, if we do this again, then that will officially be locked in my best trade ever. So this might be like second or third or fourth place in terms of best trades I've ever taken. I wish I had more like this, but it's likely that I'm going to get trailed out here today. And if that happens, this will still be like a top 5 trade ever for me. Gold pulling back here. And I'm probably just going to take profits. I think, I'd like to see this area hold. If it doesn't, next area, 3,200 is probably where we're headed. Would I take a trade there? Probably not, unless, see, I think if this extreme move, 61.8% retracement, maybe, but really it would probably be back here, like 3,150. 3140, 3150. It's probably where I would need. Like, I think we need to have a flush out on gold because we've had such an extreme move higher. Like, I'm not really interested in chasing that. I got to be careful with that. So I'm going to be careful with gold. I'm probably going to get stopped out here today, trailed out for a profit. This will have officially, if I get taken out today, I will have been in this trade for a total of 16 days. So that's not bad. The longer, typically with the style of trading that I do with my momentum trailing stop strategy, the longer the trade goes on, usually the better it is, right? Usually my losing trades are like I'm out in a day. My best trades take a while. China tariffs likely coming down to between 50 and 65%, according to Wall Street Journal. Thanks for that, Alan. Okay, let's see. Dollar index down 0.35. VIX is down 8% here today. Yeah, look at the NASDAQ up 3.6. What a day. We got to talk Tesla just for a second. So I went I've been in a position in Tesla for some time. Earnings were bad, just straight up bad. So why the heck is the stock up 4.6%? Earnings were not good. But Elon Musk kind of confirmed that robo-taxis are coming this summer, which got the market pretty excited. I think they're going to be rolling them out in certain areas first. I think they're doing Texas. I think Atlanta might be on the cards, which is where I'm from. So that would be really cool. But we'll see how that plays out. The earnings were terrible, though. Like, this is straight up, in terms of revenue, they missed, which were already low expectations. Not a good look for car sales. I'll tell you that much. I own shares for the long term. I do really like the robotic story. I like the self-driving, the autonomous stuff. I think the technologies are incredible. A couple things that I hope personally is I hope that Elon Musk comes back to Tesla and at some point makes a graceful exodus from government roles. That is taking up a lot of his time. And as a shareholder of Tesla, I want him building rockets and cars. Like, that's where I think he should be. I'm not saying that his efforts aren't, good intentions, but I do think that his ultimate role should be back at Tesla. But we'll see. Obviously that's a hotly debated subject. But again, I've been a Tesla shareholder for years now. It's a company that I really love. I love their technologies. I love what they're doing. They're an energy company. They're an AI company. They're a car company. But they need clearly the shareholders are saying this too. They need their leader in the driver's seat. So the way forward is, either Elon Musk comes back, takes on the full role, or he finds someone to run the ship, which would be, in my opinion, frustrating because, again, I'm not saying what he's trying to do in government is not a valiant, even if you disagree with the way they're doing it, like, it's important. I think most people agree, like, we should probably find ways to, cut spending where we don't need to. But for the shareholder side of Tesla, it's like, okay, I want him focused on, his mission, right? The SpaceX, Teslas of the world, all that innovation. Anyways, Russell's up almost 4% here today. That is a crazy rip to the upside. We've got news coming out here in just 1 minute or so to go. We'll see how that plays out. S&P's up 3. Nas is up 3.7. My goodness, Nas is ripping today. My goodness. My goodness, that is crazy stuff. Stocks absolutely ripping. Again, people excited that Trump has laid off on the whole I'm going to fire Powell stuff. He claimed that he never really said that he was going to do that. I actually didn't follow it that closely, so I don't know what he did and did not say. But the point is, the market loves the confirmation that he's not actively trying to fire Powell. I think that the stability of the bond market relies on that. You can see bonds ripping high today. Like, this is a big rip for bonds for that very reason. Guys, we got breaking news coming in here in just a second. We get some data coming in. We're just going to react to this data, and then we will bring it in. Forex James is up next. He's going to be joining us on the call. Sorry for keeping him waiting. Just wanted to get this number out. So we got manufacturing PMIs coming in better than expected. So that is upbeat for the U.S. economy, although services PMIs coming in a little bit light. Taking a look at the market's reaction, nothing just yet in terms of a significant move off of that. Don't be deceived here. We did also get kind of that opening rip off of the stuff we were just talking about with the, Trump not looking to fire Powell. Take a look at like a 5-minute chart. You can see we've just been drifting up here into this news. News comes out. Market doesn't have too much of a further reaction. So we'll see. Guys, we're going to bring in Forex James to the conversation. You guys know him and love him. Stay tuned. We'll bring him in just a moment. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
What's up, James? How's it going, man?
Yeah, good. Thanks, Nick. How are you?
I'm good. What time is it where you are?
It's 3 p.m. or 10 to 3.
Okay. Yeah. No, I always, I'm curious because you made the move, right?
Not yet. No.
Not yet. Okay.
I'm going in July.
July. Got it. Okay. So it's still normal time. I was asking because I think your time zones will be kind of crazy once you get there, right?
Yeah, I'll have to be nocturnal.
That'll be an interesting time. Might be a cool time though. That's exciting. So anyways, James, we got markets moving here quite a bit today. I was just talking about how we have Trump and Powell seeming to proverbially shake hands in the meantime, not trying to fire them. What are your thoughts on everything? What are you what are you watching right now?
Yeah, so I am looking for dollar shorts to continue. So I'm still in my Swiss yen short. Took a long on euro dollar, which isn't doing too hot at the moment. So this one is very simple because the markets at the moment, they seem to be in very clear trends, but the pullbacks are very, very minimal. We've had the same thing on gold as well, where you might be expecting a 50% pullback here, but we're just not getting that type of price action. We're sort of consolidating rather than actually pulling back. So looking to capitalize on a euro dollar long idea. Whether it will bounce here, I don't know. We'll see. Similar idea on gold, which is also looking a bit dire at this point. But at the time, gold was rejecting the 0.618 level, along with the 50 moving average. We've also got the Edge Finder scanning. It's bullish on euro dollar and gold as well. Copper, we took copper this morning, but this wasn't my trade, so I'm not really sure 100% on the thesis behind it. And we've got a euro yen short as well.
Got it. Yeah, no, it's it'll be interesting to see how all this stuff plays out. Right now, we're seeing a little bit of a knee-jerk reaction on the price of gold for the same reason it seems that we're seeing the rip up in the Nasdaq, right? So Nasdaq up significantly on the idea that Trump's not looking to fire Powell, and that security seems to also be dragging gold lower at the same time, right? So we know gold has been really thriving here recently off of uncertainty across many, many different facets, whether it be China and the US and Powell, US and Europe. I mean, it's just a continuous kind of uncertainty going on at this time. I'm probably going to get trailed out of this gold trade myself. I'd be interested to see if we get a bigger pullback, if I can re-enter the trade. But right now, again, looking just absolutely blindingly green for the day on indices, at least at this time. You got the Russell up 4% as well. And also some other... Yeah, go ahead.
No, so I was just going to say, I think the markets are very crowded at the moment. I mean, retail positioning is heavily long, specifically on silver. So I think a natural flush of the markets is coming at some point. I mean, you can say that all the time, but I think things like downside on copper, downside euro dollar, maybe some on gold as well, to allow profit taking and get some of the crowdedness out. So we'll see, but it's not a shock to see these markets come a little bit lower or a little bit higher at the moment.
Yeah, I think that's fair. I also like the euro. I mean, there's so many currency pairs against the dollar. I like your idea with shorts on the dollar as well. There's several charts that I would like to be a buyer on, like the euro, like the pound. Most of the dollar crosses, I'm bearish on the dollar, but just waiting, right? So I think, like you're saying, this little bit of a flush out. Let's say if we get this kind of move, or we see a bigger retracement down to 1.09, that might give you what you're talking about, where we see kind of a reset on this move. We could still continue higher in the big picture, but maybe we need to kind of recalibrate and pull back to some moving averages, some trend lines, some key levels of structure on this chart. Same thing with the pound. Again, really stretched here. Doesn't mean it can't keep going. Obviously, we know that's a famous last word, but we do know also that when we get these kinds of moves and then they do retrace, they can pretty quickly violently retrace when they're ready.
Yeah, absolutely. I also saw an article a few days ago saying that the ECB is likely to speak on the strength of the euro because it goes against a lot of their policy at the moment. So whether it'll be artificially dragged down by the ECB is something we'll have to keep an eye on, because what you don't want to do is get in and bias of, the dollar's down, let's just buy euro dollar, and not account for the fact that the strong euro isn't necessarily an ideal situation either.
Sure. Yeah, no, that definitely makes things tricky. And the other thing, James, I was listening to somebody talk about this. If you're someone who has been invested in, U.S. stocks in Europe, like if you're a European invested in U.S. stocks or in the UK or whatever, there's been this like double negative in the sense that the dollar has weakened dramatically and stocks have weakened dramatically. So had you have just been in euros, you would have been way better off, right? So there's like that the FX market, although it's not just about trading currencies. The FX market also matters if you're like in stocks internationally, right? Because for the last few years, if you've been in Europe buying US stocks, obviously you have to buy US dollars and US stocks. So you were like double whammy, making big wins because of the conversion rate. But then now, we're seeing the opposite extreme. We're seeing people who maybe in Europe who were very heavily long stocks are rebalancing because they're like, I'm getting killed on the dollar exchange, losing so much value, and on the, because obviously if you're invested in US stock, you're kind of by proxy also holding dollars. So it's an interesting concept.
It is. Yeah, I didn't think about that. It's a good point.
Yeah, so foreign exchange makes a big difference, not only just in trading currencies, but also trading even stocks or investing in US debt. If you're buying treasuries, whatever, it's a pretty impactful thing. What happens with the euro, what happens to the dollar, it's something to think about. So even if you are somebody who trades, this is why, again, all markets are really connected. Even if you trade like you invest in European stocks or US stocks, considering what's happening in the FX market also plays a role in the timings of your investments, the returns that you can get. So just something to think about. But James, I'm gonna let you take the stand for a little bit, let you go solo, cover whatever you'd like. For everybody who enjoys the commentary that James has to share with us, let's all just make sure to subscribe to his channel if you have not already. He puts out a ton of free value. He does bonus live streams. So if you like his commentary, you can find more on his own channel. James, thanks for coming on. You got the show for a little bit.
Cool. See you later, Nick. Have a good one. So how's everyone doing? Halfway through the week. I hope you're all well. Hopefully there's no margin calls. How long will this sell be going on for with gold? I don't have the energy to come up with a funny, witty answer for that. Unfortunately, I can't tell you. It's like saying, how long's a piece of string? Generally, when you're trying to gauge pullbacks, you would want to use previous structure. So you'd say, okay, well, gold's falling, next level of support is at, wherever it may be. And then you would just watch. If it starts to slow down, lose momentum at that level, then maybe, yes, that's the buying opportunity. Bashi, don't worry about missing my stream. It was pretty uneventful. But yeah, it looks like my gold position is going to get stopped out, which is unfortunate. It takes a certain amount of skill to lose money in a bull market, but I've clearly done it here. But it's fine. It just presents another opportunity to buy. Shells, hello. Good to see you. I was considering a short on oil today as well. I don't really have much of a fundamental backing for this trade idea, which is why I didn't do it. But I quite like the fact that we're in a very clear downtrend. 200 moving average rejection at the fib, previous structure as well. So from a technical standpoint, this looks set to continue lower. But again, if I don't have a trade idea, like a fundamental backing for that trade, is very unlikely I'll take it, especially with oil. Silver, I would love to go long on silver at some point. The problem is finding an entry. So as I said to Nick earlier, we have a very, very crowded retail market on silver at the moment. I think it's roughly 90 to 95% long on the edge finder. So typically you would want to go against those traders. So rather than buying now, I'd rather wait to see those retail traders get flushed out, come down here, come slightly lower, and then continue higher. Silver is at such an extreme mispricing compared to gold. It does sort of make me want to get into silver, see if we can see silver catch up to gold a little bit. Obviously not in terms of its actual price, but in terms of percentage gain, that would be quite nice. But I'm not sure we're going to see a plus 40% on silver anytime soon. Do I have any positions? I've got euro dollar that's losing. I've got gold that's losing. I've got euro yen that's losing. Yeah, I'm in a bit of drawdown right now. I don't have a position on NAS though, if that's what you're saying. Yeah, no position on NAS. I was in a buy yesterday for a scalp, and I closed it right before we had this gap up, which was really unfortunate. If I held it, it would have been a huge trade because it was a scalp. It was high lot size. So yeah, looking back in a little bit of pain right now. So my view on NASDAQ right now is I'm not looking to buy just because the trend is still bearish. I would actually much rather look for shorts until the market's telling me otherwise. So to be honest with you, a short from here actually does look quite attractive. We do have an overbought RSI here coming up to the 200 moving average, also with previous structure. So yeah, technically looks strong. Actually, I might take that after this stream. I want oil to dump so my USD CAD can stop lagging behind. Yeah, it would be nice. Let's see, Alan. Can you look at US 30? Yeah. It's the same thing as NAS, actually. I would be more inclined to look for shorts here. So wait and see if we can get into these previous highs here and then look to go short, I think is probably the easiest way to go at the moment. My general rule is to only buy indices, so things like NASDAQ, the S&P. I will only really look to go long. But when the market is very clearly bearish, I'm not going to go long. I might look for some short-term short positions. So in this case, rather than selling here, looking for these lows, I might just sell at this point, very tight stop loss just in case, and then just look for a gap. Look for the gap here to get filled, rather than looking for huge swings. Yeah, I don't want to be stuck in short positions I can't get out of. Made almost 5K on this sell for gold. Just chilling. That's really good to hear. Well done. Bullish trend for gold is still intact. Absolutely, Lee. I completely agree. I think gold is still a great position to have to the long side, but yeah, I'm still expecting a little bit of a sell-off on gold, whether we can see some profit taking or whatever it may be, just to buy at a better price. I'm still learning candlesticks. Do you have a video on that? Yeah, I've actually just put one out this week about candlesticks, but you're not going to learn that much from candles. I wouldn't say it's going to be a huge part of trading, to be honest with you. All you really need to know is an engulfing candle and a doji, and that's pretty much it. So then you can see a loss of momentum or a lack of momentum either way. US dollar Swiss long, pound CAD short, please advise. I can't advise you. I'm fairly sure you said the same thing last time, so I'll say the same thing again. Can't give any financial advice. So everything you hear me say is just my opinion. Not telling you to ever do the same thing. So dollar Swiss, I would love to go short. I really don't think the dollar is going to find its feet here. I think we're seeing short-term momentum, which is expected. I've spoken about it previously, but we are at a really, really strong level on the dollar here on the monthly time frame. It's not just a technical level, it's a really big psychology level as well, because it's just below 100, coming into 99.5. So whether we can break below and continue lower is a key point here, but short term, it wouldn't be a shock to me if we do see dollar bulls come in and then potentially a break and retest lower. So yeah, something to keep in mind. So maybe a long here is completely fine, but eventually I will be looking to go short. I think dollar shorts are still the theme, But yeah, over maybe the rest of the year, not a short-term idea. What do you think about AUD CAD sell? The thing is, because I don't have an opinion on oil, it's a little bit difficult to get an opinion on the Canadian dollar. I would initially look to go short because we do have a dovish Bank of Canada. The RBA isn't necessarily hawkish, but they're not, they're not rushing to cut rates. So yeah, I think a short position actually makes a bit more sense than going long, in my opinion. And even a short here makes sense. So we've got here, we've got the 200 moving average getting rejected. We've got previous levels of structure. We are seeing rejection here, so possibly a short. If we've got a fib as well, that would be nice. Let's see. No, there's no fib there, but yeah, I think this is potentially a good opportunity to get short on a pullback. New home sales just came in better than expected. Let's see. Yeah, they did quite well. 724K, beat previous 674K. Yeah, some pretty good news here for the dollar today. So we'll see if that can continue or not. What's EG looking like? Yeah, it's difficult to say. I've not seen much to back up EG. Yeah, the only thing I've heard really is that we could expect a range in between the 0.85 and 0.86 area. So it doesn't really leave me much of an option here to do anything. It would be expected for Euro Pound to climb higher into the end of the year because we are expecting, climb lower because we're expecting inflation in the UK to continue rising for the rest of the year or throughout Q2, Q3, which would obviously hold off Bank of England rate cuts. And we've also got the ECB currently cutting, so we might get a small divergence there to go short. But yeah, just now, there isn't really anything here. Hold on, there's a few messages here. Let me catch up. Okay, NG, do you mean natural gas? I know natural gas has been selling off, but yeah, I don't really think there's much of a reason for it to find its feet just yet. Which fundamental bias in AUD? Looking to take a long-term short on Aussie yen. Tell you what I'm going to do. You can do this as well. It's completely free, but if you go into the Elite Traders website, go into Global Research, click on the most recent one. Every weekend, I do this for free. It's just a macroeconomic update on basically everything you need. So we've got major currencies, exotics, commodities, equities, global news, and there's even trade ideas as well. So for the AUD, faces multiple headwinds in the 1 to 4 week horizon, a combination of soft domestic data, weakening terms of trade, subdued Chinese growth, and global trade policy uncertainty weighs on the outlook. While the RBA remains data dependent and cautious, its neutral stance offers little policy-driven support in absence of strong Chinese fiscal surprise or a significant uptick in commodity prices. So it doesn't sound very positive for the Australian dollar. So I would be really looking to go short, actually, based on that anyway. So as for Aussie yen, I think a short on Aussie yen also makes lots of sense because I'm bullish on the yen. I think we might have a short-term pullback on the yen because it is quite extended at the moment. In fact, we're already getting the pullback here. So it wouldn't surprise me if we do see a continued downside on the yen before we continue higher. So yeah, if you can find a higher price to short Aussie yen, I think that's probably quite a good idea. So you're in sells on pound dollar. Very nice. Oil is strengthening. That's good for CAD. Very true. Okay, so I've got about 10 minutes left on this stream. So if there's any final questions, let me know. I'll do my best to answer. Let's just check what's on the edge finder here. So NASDAQ is very bullish. So let's have a look and see if we could find a trade on NASDAQ. I know earlier I said I would look to sell, and I still would, unless we can see a break of these highs. So if we could start coming up, creating new highs and higher lows, see a moving average cross as well into a new trend, I think that would be a great opportunity to start looking to go long. But right now, I just don't see anything. I don't want to buy into these highs. I also don't want to buy into 200 moving average. I don't want to buy into an overbought RSI either. So it kind of leaves me in a tricky place. I can't do anything on NASDAQ right now. We've got gold that's very bullish. Euro dollar's bullish. UK 100. Dollar Swiss is very bearish. I do really like dollar Swiss, actually. Yeah, so I think the idea I've got remains. So if we can see a pullback into this fib level, whether it be the 0.618 or the 0.5, come and meet this previous level as well. Also catch up with this 200 moving average. I think this would be another great opportunity to get short just into the previous low, keeping it very, very simple. But yeah, I think we're very likely to see the dollar strength continue temporarily until we do start seeing sellers come back into the market. But again, the dollar's been very extended to the downside, so it's not really a surprise in my view at the moment. Read an article about how economic data doesn't matter. Yeah, I mean, to be honest, that's something I've struggled with recently. I think I've mentioned it on the stream before. But one of the reasons I was struggling to find any trades was because the markets weren't moving off fundamentals. They were moving purely off the tariff problems or the tariff situation. I'm not sure that's still the case because we are on pause with tariffs, but there's still a lot of uncertainty in the market. So they're not being fully driven by economic data points like we regularly see. It said by the time the data will start to show weakness, the market might already be looking to future strength and therefore fade all negative data and expectations for data in the future. Yeah, it's possible. That kind of feeds into the efficient market theory or efficient market hypothesis. So yeah, it does make sense. Things become priced in quite quickly in the markets. How do you know when a reversal will happen? You don't know for sure when a reversal is going to happen. Like this market, like I said, I'm looking to short, but it could just come, it could rally off in to the other direction. So there's no way for me to say whether this is a reversal point or not. But what you do, or what I do, is say, okay, the data is still bearish. We've still got the edge finder saying this is a bearish market. The fundamentals to me still look good. The dollar's down. The Swiss is benefiting very well. There's no speculation on a S&B intervention just yet. So I'll look to short. But again, that could be a reversal point. I could be selling into the bottom. Who knows? There is no way to know. But in terms of this being my ideal reversal point, is because the fib is a very well known, it's very well trusted, it's widely used by the masses, and the data behind the fib makes a lot of sense as well. So it's a case of just trying, and again, this could not be the right place. It could come higher, it could come up to here. That might be the reversal point, but there is never a true way to know. But you'll build, first of all, you'll build your system, which should tell you things like this, where you've got reversals and pullbacks. Then you also build a gut feeling and a discretionary approach to trading, which most traders, regardless of how experienced they are, the majority of, especially retail traders, will have a very discretional strategy. I think a big learning point in trading is when you actually learn that trading is a lot of discretion. You can have a system, but you still need a person behind it to dictate what a good trade is. So a good example of this is when you see retail traders, a lot of them will at some point try to make an EA. It's sort of a general curve a lot of traders go into. And they'll try to make their strategies into an EA, and it will not work because obviously an EA will do exactly what you tell it and nothing else. So if you tell it to sell every 50% pullback, you're going to be a world of pain because it'll be trying to buy sell-offs or sell rallies, all those types of things. So for you to sit there and say, okay, this obviously isn't a good place to buy, that's more of a discretional approach rather than a strict mechanical approach. That deviated. I can't remember actually what that was meant to be about, but there you go. Oil in a good setup, right? For me, yes, technically. Fundamentally, it's not really anything I'm interested in. But yeah, we've had a very typical fib here, obviously from the high to the low. We've had the pullback into the golden zone here. Also with previous structure, 200 moving average has been rejected. We're in a bearish trend. So yeah, technically it looks fine. But again, for me to take a trade, I've got to have something on a fundamental view. And with oil, I just don't right now. What behavior can we see from 1 week on XAU USD candle? Bullish or bearish, I guess. I don't know, man. I'm not sure really what you're asking there. Every weekly candle is going to be unique in some way. Do fundamentals follow technicals? No, technicals follow fundamentals. Because if you're saying that fundamentals follow technicals, you'd say news came out here and pushed the market down because of the fib. That doesn't make sense to me. What are your thoughts on Swiss yen, dollar yen? I love them both to go short, but again, it's more just a waiting game. So I've got a position trade on Swiss yen to the short side because I'm looking for the next sort of 12 to 18 months on that trade. Whereas dollar yen, I took a short today for just an intraday trade and got stopped out. But yeah, I think if you can if you can find selling opportunities within yen pairs, I would be looking to take it. James, what's your opinion on prop firms? Do you use it? If not, why? You know what? I've temporarily muted my view on prop firms because I've actually just got a challenge. I'll update you on that when there's something to update on. But I think they're a great way to get money, but it's very difficult to do. So it's not a case of you buy a prop firm and start earning thousands. You can quit your 9 to 5 and start trading full time, because I think the stat from what I understand is about 4% of people actually get funded. Then even less people make the first payout. So the stats are really against you. The rules are very, very challenging, especially when you are sort of a swing trader with fundamentals. So for example, it's not uncommon for a swing trader that follows fundamentals to go into a bit of a deeper drawdown, because we're waiting for fundamentals to play out, or in my case anyway. So I could quite easily have, a 5-6% drawdown, which would breach a lot of rules. But for my trading, that's completely fine. I've got no problem doing that. So as long as you can optimize your rules, you can optimize your metrics to fit a prop firm, then fine, go for it. What are my thoughts on Insta with no challenges on prop firm? It sounds a bit too good to be true. So I'd imagine there's very predatory rules around it. If it's not, and you can get one that will give you 200k funded for not doing a challenge and all the rules are in shape, then sounds great. But yeah, I've decided to slightly separate my strategies. So I've got a prop firm or prop account that is purely DCA trades, because I can take higher risk and I don't really care. It's only 50k. So I could either use it as a piggy bank and just DCA euro dollar, as I always do, obviously with high risk, and see how it goes. So yeah, that's that. In terms of trades, there's not really anything going on. Oil is reacting as I would have expected. I think I said it early on that it makes sense for some sellers to come in at this point. So yeah, it's one of those moments where I'm sat watching my setup play out and I'm not in the trade. But there you go. I found a prop firm where they offer no challenges for a limited time. Look at the reviews, look at where they're located, look at who's backing their payouts. So are they broker backed? Are they fund backed? Who's backing the payouts? And also look at the rules. That's like the main things you should be paying attention to. Also the pricing. Oftentimes very cheap prop firms are the worst ones, because they're there just to make some quick, easy money and not actually sustain payouts. Silver's moving up, which is frustrating. I would really expect downside here, but it's clearly just not coming, which is really unfortunate, because we're stuck in this horrible, it's not really even a range because it's moving up, but you cannot, or I cannot trade this. I can't even begin to look for an entry at this point. So it's just a really annoying waiting game at the moment with silver. What challenge do you have to do on prop? Each prop's different, but the general rule is you have to make, anywhere between sort of 5 and 10% on the first challenge. You normally have a 4 to 5% daily drawdown. And then phase 2, normally you'll have to make less percentage. So it might be like a 4 to 8% or something. But yeah, that's generally it. What do you think about dollar cost average on gold? Blake, the thing is, it could be a beautiful thing. It could be an amazing, it could even be a life-changing trade, actually, if you could manage to do it. The problem is your capital. If you've got capital to be able to take each entry at very low risk, that's great. But because gold is heavy, it's not a asset that a $500 account could DCA. You would end up with a blown account very quickly. So that's a problem. So if you've got, I'd say 50 to 100K in a trading account, it could work. But yeah, it's just the problem is with gold's behavior, as Nick said earlier, the pullbacks or the profit-taking moves can be very aggressive, very, very mean. So if you're stuck in one of those trades with, an over-leveraged position, you're going to be feeling a bit ill. Gold, it's the first impulsive down, broke structure, looking for correction up to sell this ball out. Very nice. Sounds like a good plan. Hi, James. How do you use currency strength charts? Very simply. Let me find one. Is there a currency strength chart anywhere? I don't like all these meters. I want a chart. Ah, here we go. There you go. So the way you would use something like this is, I use it mainly as an entry tool. So what you could say is, over the past couple of hours, we've had the Australian dollar doing very well. Maybe I want to go long on the Australian dollar. So you would wait and you would say, okay, I'm going to wait until we've got a crossover. So you could, if you want to go long AUD, maybe you would want to go long AUD against this is the Swiss, so AUD CHF. So you would wait for these strengths to start pulling back a little bit, then you could enter and use it like that. Or you can just view trends of the currency. You could just say, oh, the AUD is very clearly dominant. You can gauge the market sentiment. So if you've got the Swiss and the yen obviously dominating in strength, likely in a risk-off market. So that's pretty much it. I don't use it for anything complex. It's more just to say, okay, well, if I want to take this trade, maybe now is the best time to do it while we've got a weak currency versus strong currency. I hedged $10 to $200. I don't use stop loss, 500 leverage. Fair enough. It sounds like, yeah, a lot of risk was taken, but if it works, it works. What do you think of Alex G strategy? Because it looks like you have a very similar response. Yeah, the thing is with Alex, and I'm not going to say very much because it's not my stream to do so, his chart analysis is actually fine. I don't really have any issue with the way he trades. The problem is, I think he doesn't pay any attention to why the markets are moving. So I remember one of those $100 to 1 million challenges, he got caught in the yen sell-off. Sorry, was it the yen rally, which caused the dollar yen to crash? So it's things like that. He was like, oh, the candle just dumped out of nowhere. So Alex, if you just paid attention to the news, you probably could have avoided it. So it's just stuff like that. Again, his technical strategy seems fine. I mean, it's very similar to the way I trade. As you said, it's break and retest at key levels, really. It's very simple. What is my account size? My account size is none of your business. I've got one 50K account with Funded Next. I've got a 100K, well, slightly over 100K with Darwin. And I've got a different account I keep private with some investor capital in. And I've got a fourth account. I don't really use that these days because I'm liquidating it. Cool. Guys, Chris is here. So I will leave you all with Chris. You're in great hands. Don't leave when I leave. Guys, I will see you all very, very soon. Thank you for having me. You've been a great chat as always. Have a great day. Don't get margin called. Stay safe.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, what's happening? Happy Wednesday and happy Wild Wednesday. We have another ridiculous gap to the upside, just like we had gaps to the downside. This market just doesn't like to do anything unless it's non-opening to closing bell. So last couple days, gap lower, push all day, gap higher, push all day, gap higher, a little bit of a reset, neutral. We're coming close to our Wednesday swing high, which would have been April 9th on that fateful day of a 90-day pause. And here we are again, softening our stance on China. There's no way it's going to be 145%. We're not going to fire Jerome Powell. It's like, I don't know what you call that, but I would say crazy comes to mind, because why would you say things that are going to be taken by the news that are going to be the exact opposite the next day? So here we are. Markets are pseudo excited about this kind of relief and maybe a little bit more certainty on like, hey, it's not going to be as bad as everyone is thinking. There's still a lot of technical resistance in the near term. I mean, look, if we somehow surprise today and get up to, this Wednesday high, which is around 54.82. I think that was the futures high. This is actually 54.80 or so on the spike. But you can see all this past support to become resistance. The blue lines represent my SPX sell trade this morning. I'm holding a couple SPX trades for right now. This is my call side. That's my put side. Looking to see how this plays out for the morning. I did get a really crappy fill. The market 5 minutes into the open spiked aggressively, and I kind of threw off my fill. So I'm just kind of riding this thing out. I'm sitting break even on this trade and about $20 down on this trade. So I just need a little bit more time to get out the premium. I did close out some profit today. My puts on SPY and Qs. That's an update for Pulver alerts. So let me put on, I don't know if I listed it as a naked put or if I listed it as a cash secured put, but I did that during the big VIX spike. I was selling puts on SPY and QQQ. So I think I put cash secured put. Yep. So I found it. So I'm going to jump into it. It was a 523 expiration, 435 put for $4 credit on the SPY, and a 523 expiration, 365 put on the Qs. So collectively, that was $8.25 credit. I closed them each down for about an 80% win. So that profit looks something like this. It was about $8.25 credit, 80% take profit. Close it out for net $6.60 or so. So I'm going to jump to that trade right now and close this one down. This will be a reply. Trade update. Closing SPY and QQQ. Cashiered puts. So a SPY entry 4.06 credit, closed for 84 cents debit. QQQ entry 4.18 credit, closed 74 cents debit. Taking the win, around 80% max profit, rather than waiting another 30 days for full expiration and the remainder profit. All right, so that is updated. Posted a trade yesterday in AMD. That's a new trade. That one's actually already showing some profit. And P&L, doing fine, hanging in there, up around 83 grand year to date. I'd like to still see my higher watermark at 205. I took some losses. I mean, I don't think it'd be foolish to say like, oh, I didn't take any losses during the sell-off. I definitely did. I had some income trades that didn't work out. I'm in Tesla right now. That we had it kind of a. I think the good thing about Tesla is it showed how beat up the stock actually was because it had terrible earnings. We missed EPS by 34%. We missed revenue by 9.1%, and the stock is actually up. So why? I have no idea. I don't care. All I know is that I've got a cover call at 257.50, and my break even is 247. If I get it called away, I'll make $5,000 on Friday. If it doesn't get called away, then I'm selling premium aggressively, and I can. I mean, the nice thing is I'm not battling Tesla with some terrible, $150 put that's like, oh crap, we're down to $200 now. That would have been a little bit more difficult than what I'm dealing with right now, which is, I mean, hell, I might get called away. So 257.50. That's my covered call this week. So if it gets called away, okay, fine. I'll flip for 5K, and it took me 4 days. So there's definitely worse problems to have. So I'll see what it does. But I'm going to keep a close eye on these trades this morning. See if my levels will still hold. Let's go top down. Let's chat. So last couple of weeks, and a lot of these live sessions, the last couple of weeks, this is what I talked about. Once we put in a bottom here and we had that pullback, I wasn't surprised that Monday, I said Monday either going to be a wave structure. You go back and check these sessions, but you have to look through a little bit of the noise and see a swing pullback. This is a flat pattern that's going to retest the high. Well, we did so in a gap type fashion, but that's what the market does. Point is, prices are going up. That's helping assets. We're right back into a 200 moving average on the daily time frame, or the 1 hour time frame. But if you go to the daily chart, I think this is where the market comes back and finds some noise. So if we go support here to become resistance, that's clearly a hurdle that the bulls have to overcome. They may struggle at that price level. If we get into this chop zone between 55 and 5,700, that's around the 200 moving average on the daily time frame. Again, we did experience the death cross, which is the 50 and the 200 moving average crossing over. So even a pullback, I mean, look, tariff optimism spurs Trump softens tone on Powell. Yeah, he said that he can't fire the guy. Well, we all knew that going into the quote ahead of time, but you never know. He preaches crazy enough that sometimes you got to listen, and you have no choice but to listen. It's the one president that's on the economic calendar for whatever reason. Like it just drives me crazy. But it's like everything that has been said is now being backpedaled. It's not a surprise. It's just what we've been dealing with is a lot of market chaos and a lot of noise and volatility, and all that was created from this structure having this low to high. All this is noise. Now the good thing is noise is heading higher, so that's fine, and it's given a little bit of sense of relief. I'm certainly going to use this to get more capital, have more cash on hand, get ready to deploy it, pick my battles. I don't feel like I need to call tops. I don't feel like I need to call bottoms. I think that even if the market is going to go into resistance and sell back off, I still am interested in, maybe this area as a support zone and maybe this area as a support zone. What would make us retest the lows again? I don't know. Because right now, I mean, the Fed is likely not going to have to do anything until June. If they start cutting rates, they're not going to be pressured and strong armed into cutting rates early. Trump is clearly backpedaling on the severity of tariffs, and especially the plays with China. But earnings is maybe the next piece that everyone's watching. It's like this week we had Tesla. Thursday we have Google. Next week we have Amazon and Apple and Meta and Microsoft. So we have 4 Mag 7 stocks next week reporting earnings. And I know that's not the most important thing because we should have a broader market consensus. But if Mag 7 is still strong, I think that's pretty encouraging that there's good stability. Things have been beat up. There's a rotation that's necessary, and then we can see where the market settles back in. Okay. Alan's asking, do you think this is sustainable? I mean, no, I don't think that anything about this is sustainable. So it doesn't make me a bear, but I think that the market's going to struggle here because the reality of the situation is right now the U.S. is like the U.S. has played its cards, right? We came out swinging with all these threats, and all of a sudden we've showed our hand, and that is, well, we're willing to backpedal everything we say. Um, I don't know how that's taken globally, right? I mean, it could be like the U.S. is losing all sorts of integrity with global trade. The U.S. is losing all sorts of. I mean, the question this year is the dollar is losing world reserve status. Certainly seems like it when it's down to the worst start in 19 since 1995. The dollar index is down 9%. Gold has been ripping like crazy, outperforming. Arguably, this is insane. Over the last 20 years, if you look at GLD versus SPY, gold has actually outperformed SPY. Now, it didn't happen until this year, but the fact that if you have a portfolio with gold exposure, and now 20 years into it, it's like gold is overtaking the S&P 500. That's crazy. So, point is, on the technical side, we have a death cross. We have a lot of resistance ahead. The bulls are going to have to prove beyond a shadow of a doubt that they have what it takes to get above 5,700 without being a bull trap. I mean, I think that this is a bear trap area. I think that this is potentially a bull trap area. But the pain trade right now is probably risk up. Like the pain trade is up. Why? Because everybody's bearish. AAII sentiment is, weeks and weeks and weeks of red. It's like over 50%. I think that's like one of the worst streaks we've ever had. Let's go to Edgefinder and see what AAII says. So let's go to sentiment and AAII here. So how many readings in a row have we seen? I mean, this is pretty terrible, right? 1, 2, 3, 4, 5, 6, 7, 8. We have 8 readings in a row over 50% bearish. Probably the worst this AAI tool has ever had. On top of that, you have the University of Michigan Senate report, which is the second lowest reading ever in like 50 years. So the pain trade is the contrarian side of that. If everybody's bearish, well, the market probably finds a way to melt up. And we have been talking about this. Is like, how does this market melt up? You backpedal the narrative, right? Instead of it being so doom and gloom, it's like you say, yeah, we're going to find a way to work with China. We're going to find a way to compromise and have a happy medium. Boom. Market's excited for a second. But enough damage has been done. I'm not super convinced that this market can get and exceed this level. If it does, pleasant surprise, yippee skippy, but I'm super skeptical at these highs. If we got to those highs, I think this would be a high swing that nobody's really going to be ready for, but I just don't see sustainable runs. So first things first would be we have support become resistance right in here and right in here. So, today with the big gap up, I mean, the market's already up 3.29%. Is it possible we go higher? Sure. I mean, we saw a 6 to 7% intraday move on April 9th. I think it was like a 9 to 10% move from low to high. I think the Nasdaq was 12%. I mean, one of the most wildest days I think we've ever seen. It was definitely a historic day, but not without more noise. So this high is 54.81 on SPX. So do we end up tapping that today? Is that a little resistance zone? Do we run into here's some gamma levels? Like 5,500 is a pretty big level that I think could get hit today. In fact, I'm gonna find out if I can trade it. Let me see if I can play a little butterfly to it. Today might be a little risky because I've got some sell side premium. Damn it, I'm not gonna. If I put a butterfly spread on, that would offer a nice reward to risk. I'm kind of chopped up around that zone, so I can't really put on the trade now. Could I pin this one? So if I mean, I guess I could do this. I could do this is a terrible trade, so I'm probably not going to take it. But if I did a butterfly spread here, 20 cents to potentially make, $450, but I've got to be spot on with this. Realistically, it's like if I turn, 20 cents into 40, 50, 60 cents, all that is price would run up to the 5,500 zone for the day. That's all it is. So, I mean, I could turn a very cheap debit into maybe a few dollars today. If we're going to find 5,500, it's just going to be going through that level. So let me see. I don't know. The only reason I'm taking it I'd like to go 10 wide, but that's going to mess up my iron condor that I put on this morning. So if I do it really narrow, Also, I'm noticing that the bid mid ask is quite wide. I had, I have good trades running like a Tesla earnings trade, Netflix earning trade, Verizon. I'm not getting filled on any of the mid prices. I'm having to like penny myself down, go a little bit lower on the fills, and even the fills that I got on those puts, it's like they were okay, um, but it took me like a couple of different trades to like cancel, replace until I got filled. So anyway, point is with this little butterfly, would I want to take the trade and risk 15, $20 to maybe double it? I mean, it wouldn't hurt if we're going up to hit this strike. I think we get in the way, but yeah, that's probably the trade. So see if I can throw this in for like a 15-cent debit. I'm going to go 2 contracts here. So 15 debit, not filling. Let's go 20. All right, it's got filled for 20 cents. I'm going to set a chart alarm at 54.90 and check this price. So 54.90 is not that far away. It's only 20 points high. Tesla crossing 257.50. Cool. Basically, my job is to not get in the way. If this market's going to have this relief rally, great. Let's have the relief rally. I'm going to set a chart alarm here at 54.90 and check the butterfly spread. If that level gets hit, that would be also up above. Right here's the Wednesday high around 54.81. We're trading at 54.68. So right here is the Wednesday high. I mean, we could push into there. I do see a nice little gamma level around that 5,500 zone. If we cross 54.90, then I'm looking to hopefully double that butterfly with an out of the money move. It'll be close. Okay. All right. So chart alarm is 54.90. Must be it didn't trigger that alert. So 54.90. Check butterfly. Okay, very good. Tesla closed out shares, and let's see what I'm doing with the remainder position. So we're 257. These are the trades that I'm watching. I have a modified collar trade, which is I've got a call at 257.50, which is now like, oh crap, I'm down. Well, my break even is 247, 247 and change. So I have the protected put that is down. I have the covered call, which if Tesla looks like it's able to get to 260, 265, maybe I roll it and do like another, I might roll this down in price, but out in time and take on another week. Going out to May 2nd might not be awful, especially if we're entering to like buyback zone and earnings next week come in pretty positive for the Mag 7s. So I might look to roll this. I don't know. Let me play around with this for a sec. So if I go 257.50 and I roll this by a week, so I can roll this to the same strike and make another $5 on this trade. I can roll this down to 255, which brings 250 to, it's going to be an offset of, so I'd have 626 minus 250. It basically gives me a net $376 more. I do that on 500 shares. It's like, it's another $1,800 by waiting next week. I don't want to get too cute with this because I do have some May 16th expirations at the 255 handle. So it might be in my best interest just to let it get called away this week and not worry about it. I'll make 5K and then I can worry about the ratio spreads I still have running for May. So I still have some exposure like this. This one should be fine for May. This one should be fine for May. 245 is my 111. Bull put spread. So 245. Yeah, so 245 is my line in the sand out to the 16th of May. We'll see. So it might be an interesting trade where it's like I take Tesla stock, I flip it for profit, take Tesla stock, flip it for profit, and do it again for a third time. It's kind of getting exhausting doing that, but if I flip it for profit each time, it's not the end of the world. And if I lower my cost basis in the low 200s, it's not a stock. I don't mind sitting on the stock, but I just want to make sure I'm lowering my cost basis. So, all right, to be continued. Let's talk gold. Everyone's least favorite. So S&P up 3+%, NASDAQ up over 4%, Dow's up 2.83, Russell up 3.64. VIX getting smashed lower down to 27.49. Nice to see some fresh lows on the VIX. US 10-year spiked down to 4.25, then came right back up to 4.34. The nice thing is we did at least gap a little bit lower. I'm curious what TLT is looking like. Jeez, oh Pete's, man. TLT with a big gap up and it's still fading. So we gapped up on TLT around 2.82%. We are fading pretty quickly. That's where you're getting the jump in the US 10-year. So 10-year at least gapped lower, but it's still very, very sticky. Global bond yields are going up, which is why the US 10-year is not falling the way that I'd like it to. This is a super disruptive price action. This has messed up everything from 5 to 30-year financing terms. This is going to be messing up the refi pocket coming in, July to December. I hope this gets better. I keep looking back at where we were Liberation Day before everything got, screwed pretty much. So anyway, 20-year and 30-year. I mean, this is wild, man. The 30-year was up over 5%. The 20-year is up over 5%. I hope yields don't go higher. I know that's the big contrarian macro play right now is that the Fed's going to start cutting, but yields go higher. Nobody knows. Okay. All right, let's go gold, silver. So let's go dollar index first. Dollar index, as I said, if you're short the dollar, protect your profits because we're probably going to get a reversal. And as I said, reversal as in a pullback doesn't mean that the dollar is all of a sudden making a full recovery. Look, there's lots of areas to be a dollar seller. You can sell the dollar in here. You can sell the dollar at the backside of this trend line. You can look for any type of price action that starts to confirm and roll over. Plenty of opportunity to sell the dollar, right? I mean, in fact, this has been dropping so aggressively. Don't buy the dollar unless you are confident with the pattern down here to get a short-term rally, or you're getting price on the right-hand side of this trend line that's going to stay here and offer up a low. But I would not be a buyer of the dollar unless this is a swing trade on the right-hand side of this trend line. Okay. In fact, there are so many stocks, so many instruments you can look at. Just draw a trend line. I mean, look at the, I'll go XSP, so it's a little bit easier to read. Okay. Right now, to Alan's question earlier, is this sustainable? The only way I'm saying this is sustainable is if the market breaks this trend line, right? I mean, you can run into support becoming resistance there. You can run into the 200 moving average becoming resistance there. This could be the ultimate bull trap setup where the market comes up and finds the 200. It's like, oh, it's breaking the trend line, and then boom, retreats, right? So I think that to me, the bulls, so this is XSP, which is like your mini SPX. The bulls have to be above 580 in order for me to think, hey, maybe this market really did turn the corner, and that sucks considering we're down here at 480. That really does suck. Okay. But the reality is, having this high and this low, and we're sitting right in the middle, this is the perfect zone for bulls and bears to fight. And I don't know who's going to win, because I've seen plenty of cases where, why would the bulls win? Because all this wasn't as bad as it really needs to be. Okay, fine. But that's one thing. I mean, because I guess you add some bullet points of like, well, the U.S. economy is pretty resilient. Now global trade is starting to get better. It's starting to go. Negotiations are opening up. Are they though? And I think on the other side, the cons, like that's what's scary to me is like the pros and cons list of this market. The cons are way bigger than the pros. So if we don't have like impeccable earnings, and we don't have, I mean, hopefully halfway the point of this year or later this year, we don't see like a fairly accommodative Fed, as well as lowering inflation price, or like seeing lower inflation and lowering costs. I don't see this market justifying higher highs. So we have a lot of work to do on the bulls. The bulls have a lot of work to do. Now they can come back up. They can find all these levels, but I mean, it is what it is, So anyway, if it doesn't break this trend line, there's no buy. If we break the trend line but we hit resistance, don't be surprised if it's a fake out and a bull trap. So I'm still pretty skeptical of how much higher these bulls can run. Days like this where it's just large gaps, I don't know how sustainable that is. I think that this gap becomes filled at one point. You take a look at a futures feed. I mean, zoom in. I'll just go to this feed here for ES. Okay. I mean, we gapped higher on futures, for crying out loud. So, I mean, one thing that we see a lot is there's a kind of a purity and efficiency to futures trading. Just make a note right here. We're probably going to fill this gap in the futures market. And where would we fill that gap? Well, we might run up into this resistance zone and then fill that gap, right? Would anything change? It's just a bunch of noise. You got intermediate lows here, you got highs here, and we got a gap sitting right in the middle. So it wouldn't surprise me that like today feels good, but we're having heavy resistance right around the corner. We had a gap fill that is pretty obvious. So who knows? It's like it's so hard to predict 2-3% gaps, and watching these markets rip intraday, it's not easy. So all right, let's keep going. So oil is turning a little bit. A couple things I would still consider on oil is I'm not ready to take the trade yet because I think the reward to risk is pretty terrible. But if somehow oil were to come back down and revisit the lows, I might look at a 1-1-1 trade or a 1-1-1-1 trade, and that is where I would have a debit spread, have a wider credit spread, see if oil can hold the levels, and try to generate some profit. So right now, if I did that trade, $55, and I want to look at it. I don't think the reward to risk is going to be fantastic. So let's go CL for futures. I'd probably go out at least 30. I mean, I don't have the expirations that I want. It's either May 19th is 26 days out, or it's 54 days out. Now I'm going to collect a little bit more premium on the 54-day trade, but let's have a look. So if I did. Let me look at the deltas here. So this, I mean, the futures contract is way pricier. If I flip this around here, put wise, so 55 is the low. And if I did, I'm just depending on, it depends on the credits that I can receive here. If I did like a 57 by 57.50 by 57, that's potentially a $500 profit. And if I sold another one, but now I need to widen this. So I go here for a credit. That's $100. Like this isn't a bad trade. If I'm right, I make $100. If I'm right with the profit trap, I make $600. My max loss would be $430 if price is below 55 or 56.50. So that's right around the lows out to June. That reward to risk is not awful. Income wise, it's $100 over a 54-day window. That's not a terrible trade. Let me shift this down one strike. It's about the same. Probability of profits around 75%. I'm clearly playing with a little bit of volatility on oil. This to me is a better trade if we were closer to the levels now. So rather than forcing a trade, I mean, I don't mind I don't even think I get filled at 10 cents actually, now that I see this. So if I go a little bit wider, now I make $200, but I'm pretty much doubling my risk, which isn't bad. It's still less than 1%. I don't mind this trade actually. Is something stupid going to happen in oil? I hope not. I would think not over 54 days. But I'll do this. I don't like the reward to risk profile right now. I think that if oil were to come back down to the lows, I will take a similar trade, but do it from a better price. Instead of doing that trade now at $62, I'd rather do that trade when price is closer to $57 or $56, then go further out of the way to see if that actually puts in a low. Maybe. So this isn't terrible for some income. If I can get 10 cents, I don't mind this trade right here. This is a small risk. Let me see if I can get filled for 10 cents on this trade. 10 cents. See what this will fill at. So can I get filled for 10 cents? Pending order not filling. Let's try to go to 9 cents. I mean, like after fees and everything, it's kind of lame. Let me do this. I'm just gonna let it marinate for 10 cents. You see, actually, I'll do this. I'm gonna put in a pending order here at 15 cents. That to me is worth it. So if price falls a little bit, I'll put a pending order in at 15 cents. So if price were to fall and help me increase the value of that trade, if price falls on oil, I get filled for 15 cents. That's $150 credit with a potential $650 max profit for a risk of about $400. I'll take that with about a 75% probability profit. I'll take that trade. So pending order at 15 cents on CL. I'm looking to see if we put in a low. Okay, that's oil. That'll be pending. Gold. So dollar pivoted hard and gold is also pivoting hard. Right now, I mean, to be fair, look, I think gold is still going to pull back to the 200 moving average. I don't think this is necessarily the start of it, but we have hit some bubbly territory where it's like, look, if you like gold and you think this is a safe way to hedge the portfolio, then buy the dip. I mean, if you buy some gold here and it goes up to 4,000, you're freaking happy. If you buy some here and it comes back down to this low and you buy some more and you buy some more, you're going to be fine. Like longer term, I still think gold is a very good trade, but you've got to be prepared for potentially a 20% pullback. Like it's not a small correction. So I don't think the dollar necessarily pivots that hard. I don't think that the stock market necessarily pivots that hard. I don't think this back and forth between China, the U.S., and the entire global economy and liquidity is done. But a little stab at these levels wouldn't be a terrible spot. So GLD, I'll make this even easier because this is the same trade with shares. So I would be interested in a GC futures trade. Okay. But it's the same idea. If I started a GC futures trade here, I don't want to have any type of risk until price was all the way down to this low. Like that's how much wiggle room I want to give this thing. Now, I don't think I can get that trade, but I'm sure as heck going to find out. If I do a 2,800 trade, how far out do I have to go on GC futures? And this reward risk might be awful, by the way, but I'm going to take a look. So if I went out to 188 days out to October, I still think this is a good scenario for gold to have some room to run. And we were down to the 200 moving average around 2750. Okay. So if I did a 2750, so if I did a 2760 by 2755 by 2750, then I create a spread here for a credit. So I'm risking $460. Now I'm risking about $1,000 to make 70. That's a terrible trade. They're way better. They're way better. Now, granted, I have a profit trap of $500. That's not why I'm taking the trade. I'm looking for income with a high probability of profit. This is a terrible trade. The probability of this trade is I'm going to make about $60 to $70 per contract to risk almost $1,000. That's a horrible trade. So gold futures probably not the way to trade it. However, GLD, as boring as it may be, GLD offering the first dip in a while and still having room to correct. If I bought some more, I've got to be prepared for like a 16 to 20% pullback on GLD. So if I started small, okay, fine, we'll start small. So if I bought a little chunk of GLD and I buy another chunk of GLD and another chunk of GLD, that's a long-term trade. Do we come down to this level and come back up to the highs again? Do we have more problems where gold is still going to be like the best global safe haven right now? Maybe Bitcoin is going to start nudging its way into that conversation as well. But you just, it's like you can't just go all in and say like, there's my dip to buy. I think that this could still pull back. I've been talking about this bar count for a long time, and I don't mind taking a stab at this for GLD. but I don't really know how aggressive I need to be. I mean, I'm saying that personally because I have plenty of exposure on CEF, PHYS, GLD, SLV, and Bitcoin, and way better prices than adding more to them now. You know, so I wouldn't mind adding to GLD. I mean, I'm up $21,000. I probably had a $6,000 or $7,000 swing today. Okay, but if it is going to, fall back into like 290, fall back into 280, then I'm willing to have that conversation. Like this dip, if this is immediately bought, then gold is truly a very, very, very bullish market. But if this is a bit of a pivot to have a little bit more of a correction that pulls back into more dynamic support, then I'm willing to kind of dollar cost average into that. Like, look, a daily time frame still hasn't even hit a 21 to 50 moving average are both pretty aggressive. So if it at least hit a 21, at least hit a 50, and then maybe I'll throw a little allocation. I could throw another couple $1,000 at it and have this maybe revisit highs again. But remember, like gold's acceleration is going to be more of like the death of the dollar and major global uncertainty. If US and China are going to play nice optically and make the headlines seem like everything's going to be resolved, then gold might lose some of this amazing, safe haven uncertainty status. I also think that central banks that still want to buy gold, that are buying gold, are going to buy dips and not just keep adding to all-time highs. So also keep in mind, do we not talk about how crowded gold is? It actually is more crowded than the Mag 7 was last year, which was 30% of the entire market. So gold has become an extremely excessively crowded trade, which is why I'm a little reluctant to say I'm just going to jump in and buy this dip. I'm not yet. I want to see if it comes back a little bit lower, but I will say that coming back to like the 50 period, I'm willing to throw something in there. A 200 period, absolutely willing to throw something in there. So I will exercise some restraint and see if we can get a pullback. Okay, silver on the other hand, yay, silver's doing better. Here's XAU, XAG. There's a comparison. Did we not talk about this? Right? That at some point, this ratio that has been stretched to a pretty big extreme here for the last couple of years is now showing that silver's catching the upper hand. So this is good for silver, and SLV is benefiting. So SLV is now up, $9,100, and it's been a wild ride, right? I mean, that little jump we had on SLV looks like my diagonal spreads will be looking pretty good. Anyway, call at 34, calls at 33 and 34. I don't think I went out super far on this, but let me check. So SLV, I've got a cover here for June at 33.50. Okay, I will consider rolling this because I don't want to let my silver shares go. I really don't. So I mean, this is out 68 days. Let me check the deltas here on June 30th. So June 30th, 33 is currently trading at a 30 delta. I mean, if we have a 1 standard deviation move to the upside, then yeah, I might be tested on this side. But I will consider rolling it out in time and up in price. I might even be willing to pay a small debit for that because I want to let this thing run into the 40s. I'd love to hold on to SLV into the 40s. I'd love to hold on to silver into the 40s. Okay, I think there's still plenty of profit potential on SLV to get to 44. There's profit potential on XAG to run up into the high 40s. We had a high in 2011 and a high in 1980. It's been there before. That's what has been attractive to me this entire time with silver, is all the way down here. I looked left on the chart and silver has been there. So I'm like, if this structure is anything bullish, we have whatever channel it needs to do, whatever structure you want to look at. But if that's the destination, bring it on. And that, one of the few highlights that I could see some good asymmetry as far as reward to risk. Okay. Bitcoin had a great day yesterday. A nice 2-day run on Bitcoin. We have cleared these recent highs. I will be watching Bitcoin for the following structure now that we've pulled back, or now that we have broken these recent highs. This level and this little choppy zone right here, I'm looking to see if we have a pullback. Look, you drag a fib. I mean, this is pretty easy. Look at just some behavior. So take your low, take your high. And if the market pulls back, let's say to the 51%, 61% zone, that puts us right about here. So if we have a pullback on Bitcoin to around 85,000 or 82,400, that's a good window to look for a swing trade if you want to add anything to it. So, I wouldn't mind seeing a pullback and then a push up and then continue higher. I mean, maybe our destination is Bitcoin's going to start making its way to all-time highs. It's fine. I'm not going to complain. But if it hits here for area 1, we got to be prepared also for potential retest of the lows. I still like Bitcoin. I mean, I think it's a good diversifier to have. I think there's plenty of upside potential. Nobody knows how well it's going to do, but there's obviously a lot of legit profit target, and SPX. About freaking time. Hit full profit target today. Jeez. Wait until 11 a.m. Good. Crikey. Okay, SPX. Trades 1, 2. Profit targets hit $1.85 and $1.85 debit. 2 for 2 with profit target wins. Feels better than yesterday. Yesterday was 2 small winners, and the day before that were 2 small losers. So definitely a bit of a grind, but nice little snag of $100 today. Okie dokie. Let's keep going. How's everybody doing? We all right? We're hanging in there. So who's buying gold right now? That's what I want to know. Who's buying gold? Like I said, I don't mind doing it, but if I were to buy gold right now, I'm going to buy it here and here and here. I can't just say this is my position and put a stop loss. That's so subjective. This market can pull back 20%. Okay? That is how far away we are from these levels. So just be careful. But if we pull back to at least a 21 moving average or a 50 moving average, I don't mind looking at structuring trades on gold futures. I don't mind looking to add a couple more shares into GLD. And I don't mind just holding firm on silver, because silver I think is looking pretty good. If Bitcoin pulls back, also levels to add. Okay. All right. MicroStrategy. I have a cover call on this one, a collar out to 310. It's out into June now, which is okay. I'm trying not to be super, super bullish on anything past the end of June. Like July to December is going to be where this euphoria market becomes a reality if it's sustainable. Because by June, the Fed's going to start cutting rates. By July, we have this 90-day window that was probably just made up. It probably was never meant to be anyway. But it was a pause to get a little relief rally. And here we are backpedaling on China. So July is like, okay, 90 days up. How does everything look? How's the U.S. look as a global trade partner now? Are things better? Things worse? Is it the same? Are we no better off? Are we just stupid and disrupting the entire global economy? Maybe. But July to December, we have more months of inflation data. Fed starting to cut rates. Where are the yields at? Are we starting to see any type of job numbers ticking higher? So if we go to initial jobless claims right here, again, the trend is still not awful, right? So until we start to see these trickling higher, until you start to see continuing jobless claims trickling higher, I mean, you can't see a trend here at all, right? I mean, this is so far, this trend is not giving us any concern for a recession, but do not ignore this, because if we start to see that initial jobless claims, continued jobless claims starting to go higher, not a good sign. Okay. If we start to see in June that the Fed is cutting rates and the 10-year, 20-year, 30-year yields are going higher, not a good sign. Okay. So from a macro perspective, what is nerve-wracking about this current environment is that the US is doing things that might even resemble a emerging market, which you'd never think that the US would be an emerging market, but it is trading like an emerging market. If we have to see our yields increase to attract back foreign investors and foreign debt holders, that is what emerging markets do. Okay. That's really, really damaging if that's all of a sudden what the US has to resort to. So I hope that's not the case, but these are things we have to be watching. Okay. Lee says I was on the gold sales and felt strange clicking the red button. I mean, I think that red button might be pretty short-lived. But having said that, look, if the markets are going to rally, if we get equities to rally, I mean, and we'll go across the board, right? Like we're doing a lot of U.S. instruments right now, but across the board, if the globe is up, I mean, go to the heat map right now. Okay, you have 84.4% of stocks advancing in the U.S. You see some red. Okay, let's see where things are shifting. You're going to see all your defensives, all your crazy, staples. These are all going red today. So Coca-Cola down slightly, Procter & Gamble down a little bit, Clorox down, or Colgate-Palmolive down, Pepsi down, energy, XOM, CVX down. Healthcare, that's interesting. Bristol Myers Squibb, I don't know if they have earnings today, but they're down a little bit. But there's a lot of green, right? Nvidia's making a big comeback back above $100. I mean, whatever, it's fine. Microsoft back to $379. Apple back above $200. Amazon making a nice little rip up, almost 7.5% today. Tesla surprisingly had a terrible earnings report. It's up 7.62%. Why? It's one of the most liquid and highest volume option trades in the market. And so being down almost 60% from peak to trough, well before earnings, a lot of the crap was priced in. A lot of the negative was priced in. I think Elon Musk is done with Doge in a couple of months anyway. And I think everyone at Tesla, every investor rather, is like, go back and do your job, right? As they say, don't quit your day job. So if he's a Tesla guy, if he's a SpaceX guy, is it League of Legends? Like what's the video game that he claims to be a master at? How does he have the time to do all this stuff? He doesn't. Anyway, but Tesla's up. And a bit of a contrarian play, even with the miss in earnings, but a lot of the bad stuff was already priced in. I'm sure there's some optimism there. It's like there's still the robo taxis in summertime. I think June is a rollout. They haven't delayed that. Deliveries are down, revenues are down. Everyone's vandalizing Teslas across the country. It's like it's awful. But what are you going to do? One thing I thought was interesting too is the EV space has played a lot of catch up in the last decade. I mean, I think since what 2015, 2016, 2017, when Tesla started to emerge, not much has changed for a Tesla vehicle. I mean, China right now, BYD is the big threat because they're making more cars and cheaper cars, and they're starting to, have a bigger market share. So, I mean, if Tesla really wants to be competitive, I'd like to see some innovation. I'd like to, but who knows? Anyway, if I get it called away, I just want to make some money. That's all I want. I'm an income trader, trying to generate the income. And if Tesla gets flipped this week for a couple bucks, freaking great. All right. Anyway, jobless claims and initial jobless claims, continued jobless claims. We have to watch these trends. This is what makes me nervous from July to December. If these start to tick higher, that is the question of soft data becoming hard data. That is the question of this U.S. potentially facing a recession and real recession risks. Meanwhile, that's why I think gold, as Lee said, felt weird to press the sell button. I think gold is still a good trade for 2025. And the crazy part is we could be talking about a gold bubble that has no upside cap. Gold could be $4,000 an ounce, could be $5,000 an ounce, could be freaking $10,000 an ounce. So I'd rather participate in a bubble like that than trying to call the top. All I'm waiting for is a technical dip. And hopefully we're starting to see the signs of it where I can get a chance to participate in something by exercising some patience and not feeling like the only way I can get gains on gold is by buying freaking all-time highs. So I'd like to see a pullback. So today feels a little bit better. It feels a little bit more normal. It is nice to see in currency strength today that we have the Swiss getting weaker and we have the Aussie New Zealand top. We certainly have some risk on flows today and some decent volatility. So that is helping. I am making some adjustments in my portfolio for the Swiss pairs that I'm in. So New Zealand Swiss is already starting to make a nice little comeback. I'm going to try to get into this one. So let's see, try to get a pullback here. I mean, I'd love to see the New Zealand Swiss give me something better. So I'm going to go limit order at around 49.50. $49.50. 49.07. So pull back there, and then another one to load up at the bottom, which is around 4,700. So another limit, 47.07. No expiration. Back at the lows. And I'm still going to move a lot of my stops lower. So this one on dollar Swiss is looking okay. I'm going to put in another trade here on dollar. This one's certainly not done, but help the break-even price a little bit. Okay, so keep an eye on this one for the dollar. If we come back down to lows again, that would be around 80. Limit buy. Okay. All right, so getting those trades surrounded. So Aussie Swiss, I put a buy limit down at the lows around 50, 55 on Aussie Swiss. Let me get a chart up here. So Aussie Swiss, I'll go some currencies now. Yep, I'll go through all the currencies. Give me a sec. So I'm putting in, so I'm positive on Aussie Swiss, and the place I'm looking to take profit is, look, I want to be fairly aggressive here, but these buy stop orders, as I said the last week or so, unless we see here's what I'll say. If we go up to this pocket, I'm going to cancel these trades and just take my profit and then look to reestablish a whole new pattern trade. Because if we go from this low all the way up to this pocket or all the way up to these highs, I think that is a wave one. And if that's a wave one, I'm looking for at least a 3-wave move. So I'm looking for this to be wave one. If I get a pullback, I'm going to take these orders and cancel them and level myself back into a wave two, and then look for a push to symmetry on a wave three. And so what I'm trying to do now is, if I can take some profit here, so if this goes up and finds my pocket, I'm going to take the profit off that trade. So I'm already in to about just over half a standard lot. Netflix is crossing new highs again. That's good. Let me see if I'm going to try to close this trade out if it's showing some profit. Netflix and Verizon. Netflix is, come on, dude, show me something good. God, I'm freaking $15 clear. I'm $17 clear of my break even, and I'm only showing like $30 for it. Netflix, you freaking turds. Right now it's trading for about 350. Gosh, the bid is 121 and the ask is 557. Obviously, it's a $5 wide. I know I can't get that, but it's like, just give me something better than 340. All right, I'm going to put in a $4 credit, make an adjustment. Netflix is retesting all-time highs. Not bad. All right, back to this. So point is, if this continues to go higher, to me, this is eating into these inefficient candles. That's great. I'm going to take some profit there. I'm going to call this a wave one. If this is all a wave one, any type of pullback on wave two, I want to start dollar cost averaging into that for a swing wave three. That, to me, has been how I've made a lot of money in the currency market. I wait for these big time frames. I wait for these big patterns. I wait for these big extremes. And even a 1, 2, 3-wave move, I add a lot of trades on that third wave. And symmetry is a lot easier to trade to because the market hits it all the time. A, B, C, D. Easy. And yes, there's going to be sub swings, and it could be, this kind of imperfect wave structure as it goes through. But if we ultimately get to symmetry, there's a lot of money to be made there. So that across the board, from Aussie Swiss, CAD Swiss, Euro Swiss, New Zealand Swiss, Dollar Swiss, that would all work out pretty well. And if gold continues to make a correction, this should probably be a trade that plays out pretty quickly. All right, so getting it surrounded. All right, let's do some other currencies here. Aussie CAD. I'm still holding long Aussie CAD, and this support level was really great. 8,600 is up 260 pips. I'm just going to sit and wait. I'm going to ride this out to hopefully 93 to potentially 9,500. Again, if this is a wave structure, 1, 2, 3, 4, 5. Something along these lines to go from these lows to these highs, and it's just a move. But I'm going to have the patience to hang into it. Aussie CAD, Aussie Swiss, I just did. Aussie Yens. Yen pairs, you're not going to get me to really love these much. We're probably getting some risk appetite, which is going to weaken the yen. Aussie New Zealand, I'm looking to dollar cost average in. So down here towards 106. SPX just got filled. The hell, I thought I did both of those. Hang on a second. SPX. There we go. So this trade closed out So $1.85, $1.85. Yeah, so that was 50 and 55 bucks per contract. Not bad. This trade hopefully is see if I can close this one down. Well, that was quick. The day is not done. 1, 2, 3. Okay, so that butterfly, if we somehow get to 5,500 today or 5,490 today, this trade can still show some profit. Okay, I'll keep an eye on that one. Okay, Aussie, New Zealand. I'm just going to put in some horizontal levels. These are where I'm going to start buying some more. So horizontal ray down here around 106, down here at 103, and down here near parity. I will buy these levels. And this to me is just a large range trade. Aussie dollar. I mean, there's no real analysis to do here. If you were long Aussie dollar, it's time to protect your profit. It's as simple as that. You know, I mean, we called getting long at the round number at 6,000. It was breaching that briefly, and then it ripped up here 400 pips. You had a great opportunity to get long Aussie dollar. At this point, all I'm looking for in the Aussie dollar is, because we have this low to this high, if we have a pullback, you can see that this would be a good spot to potentially add to it, swing trade, and see if the dollar does continue to weaken, then we have room to go to this next level of resistance. So a consolidation zone could be a push into open space, and we go from 64 to 69, but it's going to come hopefully with a little bit of correction first. CAD Swiss, watching for a bottoming pattern. Same thing. If I get to my break even is right here. If I get a retest of this high, I'm probably going to take a small profit there and then reposition for a swing trade. 1, 2, and start adding in on swings and retracements, stop loss area below, and then look for a wave 3. So these all may be shifted in the coming weeks if this sets up the way that I intend, which would be some type of like head and shoulders pattern, some type of crown pattern, some type of bottoming pattern. I just want to see that develop, and then I'll start repositioning for it. CAD yen, if it's risk on, this is probably putting in some lows. This could offer a pretty good trade, to be honest. If you're willing to buy CAD yen, not get faked out at the lows. That's the tricky part, is don't let it do too much damage there below the lows. It might spike, it might test. It's not going to be easy, but as long as it doesn't invalidate with like a daily or weekly candle, this probably has some pretty good looking upside, at least in the near term, just to see if this is range low, and we just have another big range, right? Nikkei's in a range, so it makes sense that some of these yen pairs, Forex wise, are in range too. Let me double check my calendar today. Okay, I'm good. Just double checking. Swiss yen, I don't know. Whatever you want to do. I don't like this pair. I talked about potentially this high being a sell trade, this high being a sell trade. I just don't like negative swap, so I'm not taking the trade. I was in this trade earlier when we had this first swing. I sold it around a 5.0. I took profit. I didn't take it to symmetry because it didn't hit symmetry, but I took it down to the lows and I said good enough. So I took that winner. Now I'm out of it. I do think bigger picture though. This is probably a topping pattern. And if this is a head and shoulders trade, this neckline breaking does mean a lot more downside. So I'm hoping that's not just Japanese yen getting stronger, but rather the Swiss getting a little bit weaker. But even if it trades in a range, that's still a good looking trade if you like it. I personally am not taking it because I don't want to get the negative swap. Actually, I take that back. If you're Swiss yen short, you're actually getting a positive swap. But still not going to take the trade. It's 0.25%. I like the other pairs where I'm getting like 2 to 2.5%, 3% swap. Euro Aussie, I was hoping we have a pullback here. We're not getting it. Euro CAD is cooperating. The divergence in the overbought conditions is cooperating. So watching that one closely. Euro Swiss is cooperating as well. Again, maybe this whole thing is a low to high, higher low to higher high. If that wave 3 comes to fruition, I am out with lots of profit. So I'll continue to build this one as I can. It's going to be patience required, but the nice thing is break even is here. I'm not getting super aggressive right now. If it pulls back, I'm going to add some more to the bottoms. I'll add some more. I'll add small positions. but I'm gonna fight the good fight. Okay. Joe says, how do you trade oil and Bitcoin in times of hiking or cutting rates? Just stick to the charts, man. I mean, I don't once think about oil and hiking or cutting rates. Bitcoin, I don't think about hiking or cutting rates. Bitcoin is now starting to show its ability of it's no longer the same vol and risk profile as it once was. I think that when you put BlackRock in the ring, you securitize it. I think that it's actually stabilizing a lot more now than it was before. Cutting rates and debasing the US dollar is probably a good long-term play for Bitcoin, just like gold. Gold has, I mean, historically, gold has not served as a hedge for inflation, but rather a kind of a hedge on just the S&P. S&P has been down, gold's been up, but it's not really an inflation hedge because we've seen terrible inflation, gold perform poorly. But oil, I mean, oil to me has very little to do with cutting or hiking rates. Oil is all about supply and demand. So, conflict in the Middle East, the concern going into the Trump administration in 2025 was drill, baby, drill, deregulation, just open up the Keystone Pipeline, project in Alaska. We're going to take over Greenland. It's like, whatever. So oil prices, why are oil prices, why is that the focus of the U.S. to drive oil prices lower? Energy prices lower. That's the sticky inflation, right? Don't we have inflation? We have CPI data, core CPI, and we have super core CPI, right? I mean, all these things are just like, well, what makes the data look bad? We'll just get rid of it and call it something else. So we have CPI, core CPI, super core CPI, and when you get rid of energy and food and housing, it's like, I guess you can show that, hey, there's not a lot of inflation. But all the things that have it, they're just like, just don't use that data. It's too volatile. So anyway, oil prices to me are supply and demand. Bitcoin, I think Bitcoin's great to have in the portfolio. All right, Euro pounds, robot trading that one, Euro yen, no trade, Euro New Zealand. If it's just going to continue to slide lower, there may not be an entry here. There may not be a pullback like I'd like to see. This might just go down and down and down and down and down. And in a very kind of classic Forex fashion, which is price goes up super aggressively, price finds a way to deflate. It gets ballooned and it gets ventilated, right? The air gets let out. So, I'd like to see a trade where high, low, lower, high, lower, low gives a chance for traders to jump in with a swing. But if it doesn't happen, then I still think that this is probably heading lower. Pound New Zealand, same thing. Euro CAD, Pound CAD, same thing. Just, you're looking to follow a shorter time frame. Euro dollar, I'd said, take your profits because we're probably going to pull back, and we are. Here's a 2-day pullback on the euro dollar. Minimum pullback wise, I would just look at this. Look at a big swing here. I wouldn't be surprised if the dollar does continue to weaken in the medium to long term. But right now, even taking that swing right there, or even taking a fib, actually would be more symmetry, go from this low to high. Okay, I'm going to be a little conservative on this, but I'm going to go to that swing, and I think the euro dollar could potentially hit. We almost hit, man, we almost did. From this conservative swing from the, 95 zone, we almost hit symmetry around 1670. So crazy stuff. Well, let's do this. If you like the euro dollar long, I'm hoping that you're, out of this thing with some profit already, because we did get overbought conditions. But I'm Aussie CAD long. I've been Aussie CAD long since 86. So I'm not selling Aussie CAD. Euro dollar pullback. Look at the fibs. So we go from low to high. If we have a 30, 38, 50, 61, I'm not saying I want to add into all those levels, but what I'm saying is if we watch this daily structure with a 1 or 4 hour chart, look to see if this offers up a buy zone. Do any of these big fib numbers offer up a buy zone to confirm to get in on a swing? Stop loss would still be down here, but project that higher. You can get to the 18127 swing. You can make a lot of money right there. You go to the 1618, you can make a lot of money there, right? So I still think this is set up for, if dollar weakness persists, then we're probably going to get a decent pullback. The nature of this euro dollar, do not be surprised if this euro dollar pulls all the way back into these lows, which is around 107 or so, which is a 618 to even a 786 pullback zone. So does that mean I want to short the euro dollar? Of course not. But if it comes back up to the highs again, and that's resistance, I would look for a short-term entry and try to get a really nice topping pattern to trade this back into these retracement zones. So there's two ideas for me on euro dollar. One is right now, wait. If it comes into these areas, I wouldn't mind buying it. Okay. If it comes back up to the high, I wouldn't mind looking at another rejection and then trying to sell this thing as high as possible for a pullback. Okay. All right. Pound Aussie. I'd like to see a swing trade. So high, low. I'm looking for a lower high in here, right around like 2.11, 2.12. Pound CAD. Keep an eye on it, but ideally this would be setting up like the Euro CAD, which is we retest the highs. I think the Euro CAD is a slightly better trade than the Pound CAD right now. Pound Swiss, I still like long into this like 112 handle and 113 handle. Pound Yen, no trade. Pound New Zealand, I think we're just coming down to the 200 moving average. I was hoping we get a pullback to around 2.27, 2.28, but that's a long ways off. The other trade on Pound New Zealand, since we're close, is we come down to this 200 moving average and we bounce there. So if you're patient, looking for a bottom in here, or some type of pullback and squeeze to maybe set up a swing trade for a sell-off. But again, volatile currency pair. I don't just dollar cost average into a pair that can move 200 pips a day. So be careful. Pound dollar. What did I say? 11 candles in a row. Take some profit. Trail some stop losses. That's now most likely going to get stopped out, which is fine. It's been a great trade. This thing ran from 2,700 to 3,400. That's a 700 pip move in 11 straight days. Great, but now where's the pullback? I don't know. Is it gonna stall here and pull all the way back to the same level? Maybe, so I mean, is this a larger bullish pattern, by the way? I don't know. I mean, nobody can tell me that the UK is in a better position than the US right now. I don't think it is. I think the Eurozone's probably better positioned than the UK, maybe. And structurally, this has not been my favorite technical trade. Euro dollar has been a little bit easier to read than pound dollar. Margins are easier on euro dollar than they are on pound dollar. So I don't know. Just be careful. If you're long this one, obviously take your profits, trail it, and you're good. New Zealand CAD, I'm still long. So bought in at 8,000, willing to buy back in at 77, and taking this up to range highs around 85 to 86, even up to 87 or 88. New Zealand Swiss. Same thing on the other Swiss crosses, watching to see if I can form a bottoming pattern. If this is a wave one, I'm looking for and hopefully this wave one hits this 200 moving average. If we go wave one, where we squeeze all the way up here, take out this high, 2, 3, 4, 5. I mean, if I can make money here, I'm already in profit, but if I can make money on this third wave or make money into this first wave, we get up into my 200 moving average, I can take this profit off the table and be happy, right? And then if this is a swing, load up for a 382 to a 786 swing, go to symmetry and make more money there. So there's a couple ways to trade these Swiss pairs still. By the way, just watching this in the last 20 minutes, here's what the market is doing. We opened up with a huge gap, and what's the market doing today? Fading it. So how bad does it get? Does it come all the way back down to fill this gap today? I hope it doesn't. I think we'd be very lucky to see that we gapped higher and we actually stay here for the day. Okay. But if it doesn't, then it just shows you how much these bears are not messing around to have a day like this where it's like the market's up 3% and now it's, going flat for the day. But we'll find out. Time will tell. But I'm out with my day trades and I'm out with profits, so I'm happy. Futures, one thing to watch on futures would be right here. Do we fill this gap? Futures market usually doesn't have a lot of gaps, and if it does, they fill them. So if futures comes down and finds this level or fills this gap, well, there's your inefficiency. Okay, so we are coming back into, I think the session VWAP is now prices below it. So we started above it for the morning, but really noisy, and now we're back below the session VWAP. I think that's the session VWAP. Yep. And then we have the weekly VWAP down here. All right. Anything else? New Zealand Swiss, New Zealand Yen. I like CAD Yen. Actually, if I'm picking a Yen pair that actually looks decent, the CAD Yen is so close to the lows that might offer some good reward to risk. New Zealand dollar. Move your stop losses, protect your profit. It's nice to see this thing going higher, but the dollar is probably going to still cause a pullback. Dollar CAD, a bit of a bounce here, but that's not a bottom. I mean, this is not a bullish pattern. This is nothing. Dollar CAD to me is, down here. That's where I'm going to buy more dollar CAD. In the middle, maybe a pattern if I see it, but that's about it. Dollar Swiss looking better, but still a long ways to go. Big pocket here to fill, and possibly, I mean, the right side of the trend line is when the coast is clear. Otherwise, being very patient, trying to put something in near the lows and see if this just finds a way to, carve out some type of bottom, find a swing trade back up. I don't know. I mean, I'd be very lucky right now if we go back to 9,200. I don't need it to. My break even on dollar Swiss is around 8,500. So if we come back and fill this pocket, I turn dollar Swiss into a, I'm not going to say very profitable. Like this was really profitable for me. That was over a year and a half to 2 year trade, and there was a lot of pips. This next tranche of trades that I'm in, this next batch is if we get back to this pocket, which is around 8,800, then sure, I bought low here. I added at the bottom, and I'm going to add some more down here just in case, but I can turn that into another little chunk and be okay. Just another profit. So we'll see. Dollar yen. I don't think anybody should be surprised that it's holding the lows, right? I said be careful that we're closing in on symmetry, probably offering a better buy trade than sell trade right now, and maybe in the near term it might be a little noisy, but I think in the near term we might see this thing, carving out some lows and then looking for a little relief rally. So we'll find out. So all right, I just did all the currency pairs. And markets have faded a little bit today. So the S&P is still up over 2%, mainly due to a gap. The 3+% has faded back down. The NASDAQ was up over 4%. Now it's at 2.83. The Dow was close to 3%. Now it's 1.69. So we've trimmed about half the gains today. Russell compared to VIX. Look at the VIX. Gap lower, still higher. We're still in backwardation on the VIX. Bond volatility going down. We had a gap higher in TLT, but it is fading hard. So this, I mean, again, this is a lot of volatility in the bond market. Gap higher, but fading. The nice thing is as long as TLT is not making fresh lows, that's probably somewhat encouraging. If we go to ZB, that should be Treasury bond futures trading at 114. I've seen a lot of traders trying to get long bonds around the 112 handle. So, I mean, for scalpers, like, yeah, that's good. That's a good trade. And then before we go, take a look at S&P. Okay, look at today's candle. I mean, if you don't think resistance is a real thing, it's right there. What did we do today? We came back in just shy of the Wednesday high. It's just noise. I'm telling you, like, this market is still not convinced we're going really anywhere. Now, is it bad enough where the market's going to go all the way back down and retest the lows? I don't know. I don't think so. This market might just have a, run up today. I mean, does it come right back down? I don't know, maybe. But if we just fill a gap, it's like the bulls have to just step in. If we come back here and fill the gap, but the bulls step back in, then maybe we get back up here. We still have earnings next week. Earnings could show some stability. I think Trump should just keep his mouth shut for a couple weeks and let the market do its thing. So we'll see. Or if he's going to say anything, say something positive. As they say, if he can't say something nice, don't say anything at all. Golden rule. Words to live by. All right, I'll let you go. Have a great day. See you soon. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.